West
in there,
Michigan
and then
Teacher
the
Collaboration
administrative
Team.
appointment.
How are people getting that? Those is this like
We've been-
for select schools that?
No, it's we tried to send it out. We'll have to send out multiple times.
So that deadline is like November 1st.
Yeah, it is kind of a switch, it's like, put it underneath. Yeah.
And people have to understand, they join the first time.
God is. One book, one.
No, it'll be another one.
What do they call this kind of book? Oh, I know. Graphic novel. Yeah, graphic. I call them comic books. My kids love them.
Thank you so much for being here at the Board of Education Special Board Meeting Work Session for Monday, October 23rd, 2023. Our first order of business is to call the roll.
All right, good evening, everyone. Ms. Melton? Here. Mr. Rodriguez?
Here.
Mr. Ross? Here. Ms. Schottky here. Ms. Wade? Present. Ms. Davis? Here. Mr. Eatman?
Here.
Ms. Lewis is excused, and President Williams? We have quorum.
Next, we need approval of our agenda. All in favor, please say aye. Aye. Any opposed, same sign. Next, that is going to pass the approval of our agenda, and this is our first opportunity for public comment. Julie, do we have any cards for public comment? I should say our first and only. You don't have any?
Okay.
Okay. All righty, if we can invite Mr. Jones down to the front desk, please. There's a seat there. You shouldn't have one. Come on down to the table. We're ready to receive your comments. Pardon?
I said, is this general?
This is any public comment. It's just one time tonight. As you know, Ms. Lewis is not here tonight, but I'll give you a brief, you want to read it? I think Mr. Jones know, but go ahead.
Okay. All right, very good. Forgive me for stepping in here and finding my words here. So public comment is limited to 3 minutes per person. You will need to state your full name before providing your comment. We will then start the timer at the beginning of your public comment time and provide you with a 1-minute notice by flagging my folder here. You'll need to complete your comment time upon being notified that 3 minutes have passed. Board members do not respond to public comment, but concerns will be brought to the attention of the appropriate staff member. We value your input and thank you for sharing with us.
How you doing, everybody? My name is D. Jones. Last week I was actually in Oakland, California. I got to be in Oakland, California for this event called Greenlining. We received $200,000 to create the first electric vehicle rideshare in the state. And so I'm really, really excited about this. But I also got to connect with Oakland libraries. I got to connect with the mayor of Oakland. I got to connect with a lot of powerful people. And I even was at a hotel and I walked to this event. And then after we left this event, I ended up seeing this gaming center. And then I ended up going to the gaming center. When I walked in this gaming center, it said game design and game development. And so I walked in this gaming center in Oakland, California, and I asked, are you guys connected to Epic Games? And what kind of game design do you guys do? And they were letting me know, and they were like, we don't have any connections with Epic, but we would like to. And so I ended up connecting to Epic Games while I was out there in Oakland, California. And my contact is pretty quick to connect back with people, and I can honestly say that I've been able to connect with Oakland and connect and build some stuff out in Oakland. I'm really excited to be able to expand what I'm doing in California because I gave you guys the same tools. I've connected with a lot of colleges, community colleges. I even got some cards I think the card that I really like, if I even grabbed it, I got a card from somebody that works in the White House, and I got to send them a one-page letter of everything that I've been doing with esports. And so I just asked my school board, because I know how powerful this can be, I just asked that you guys utilize these resources. I've connected, Jose has connected me to Godwin, and they actually utilize the resources. And that is the school district that has the largest population of African-American students, and I stay in the school district that has the worst economic situation for African-Americans across America. I really hope that you guys utilize these resources, because I'm very passionate. I love this community. I care about the education system, and I know that this can change our community. I'm not going to say it's going to be the grandest thing, but I know it can be super powerful, and I know that it can really, truly change our community, and we can be the standard for education. And I've already extended this to California, which is the 6th best place economically, and it's better than some countries. Their economy is, and I was able to build, and I already have connections where I'm supposed to be helping library districts, and I've already told you guys what I've done with library districts, and these people were at events that I was going to. So I know it's not a coincidence, and I know how powerful this is. I know it's the work that I've been put into the universe. I believe in universal energy and this energy and the things that you see, and I know how hard and how powerful this can be for our students, for the staff, for you guys to be able to say, to look. I promise you, if you did a 5-year plan, how Kent District Library has put this in their strategic plan, I promise you, you guys would be so proud, and you guys would say that this is powerful. Thank you. I really appreciate it.
Thank you.
Thank you. All righty. Next, we have our special order of business. Dr. Roby?
So good evening, excuse me, good evening, everyone. We have one administrative appointment, and it is Dr. Kyle Kroll, the Director of Extended Learning for our after-school and extended learning programs. Dr. Kroll hails from the Western Michigan University and has done lots of work through extended learning and writing around curriculum and literacy, most recently serving in Benton Harbor Public Schools. She is replacing the former director of extended learning, which includes Rosie Holmes, who had been an employee of our district for nearly 30 years. And so this is a replacement of that position. And so we're looking to welcome her aboard. And the reason you are seeing her now is because our next board meeting is November 6th. And so we wanted to make sure that there wasn't a huge gap between that time.
And so this is an item that we have to vote on. Is there any questions from my colleagues?
I do have a question. Just looking at operating norm number 5, receiving materials in a timely fashion. I would just like to know what the reason is that it was added today. And I understand it's, we don't want to extend it too much, but was this already something that was known last week that we could have added to the agenda prior to today?
Yes, and so typically with our hiring practices, and I'll actually ask Mr. Atkins to come forward because he would be the direct supervisor, but we have gone through the hiring processes and then also to vet people to make sure they have those clearances and such. And so my understanding is that that is something that happened towards the tail end of last week, and that's why we're bringing it forward this week versus waiting an additional 2 weeks.
Yeah, that is correct, Dr. Roby. And so I know we've interviewed probably a month or so ago. We went through the vetting processes, back and forth with possible contract. She accepted, and then we got here as soon as possible.
Any other comments, questions? All righty. Is there a motion on the floor to accept this administrative appointment?
So moved.
Please call the roll.
Ms. Melton?
Yes.
Mr. Rodriguez?
No.
Mr. Ross?
Yes.
Ms. Shotke, yes. Ms. Wade?
Yes.
Ms. Davis?
Yes.
Mr. Eatman?
No.
Ms. Lewis is excused. President Williams?
Yes.
Motion carries.
All right. Next, we have our financial audit review.
And so I'll turn it over to CFO Cribbs as she will provide the audit for and Plant Moran of what they've found. So thank you.
I want to introduce, this is our audit manager, Charles Sportel. He's been working on our audit for,
Just over 7 years.
as I was going to say, for quite a number of years. He's come up from a staff person up to the manager level. Our audit partner, Corey Van Dyke, unfortunately is under the weather today. So Mr. Sportel is stepping up to help me assist with this. We passed out several documents in front of you, so you've got some things. I think I'm going to first ask Mr. Sportel to kind of go through the report to the Board of Ed. There's some things we want to highlight out of that document.
All right, so the report to the Board of Ed. If you open up to the 4th page, I want to highlight a couple things here, specifically in that first header bolded, our responsibility under U.S. generally accepted account auditing standards. So the second line down there, our main responsibility is to express an opinion about whether the financial statements prepared by management with the board's oversight are fairly presented in all material respects in conformity with U.S. GAAP. We obtain reasonable, but not absolute assurance that the financial statements are free of material misstatement. We do consider the internal controls, although we do not provide any assurance concerning those internal controls. We are responsible for communicating significant matters with the board. However, we are not required to design procedures specifically to identify any material or significant deficiencies in internal control. But if those items do come up, we do make you aware of those. I want to jump down a little bit to the header, qualitative aspects of accounting practices. One thing I want to note, halfway through that paragraph, there were no new accounting policies adopted this year. You can see there was one that was provisions of Governmental Accounting Standards Board, statement number 96, and there was no impact on the school district related to that. Going to the next page and skipping down about 3/4 of the way down, corrected and uncorrected misstatements. There is a schedule that is attached a couple pages back that shows the uncorrected misstatements. Management has determined that their effects are immaterial both individually and in the aggregate.
I'm going to say one note on that. So those are on page 8 of the document. And with our fund level statements, we're only allowed to recognize a receivable if we receive the cash within 60 days. So this is related to some of our grant funding, and we did not receive those monies owed to us as of June 30 within 60 days after year end. We will receive them, but rather than to have a timing adjustment flow through our financial statements, we still recorded it as a receivable at June 30th. So that's why it's a past adjustment. It's not that there's something really wrong with our statements, it's a timing adjustment, and I just wanted to get a little bit more in depth on that.
And then the remaining of this letter is really other recommendations and other informational items. A lot of this shows, talks about some of the funding that has been received in the past, what's coming down the pipe in the future, and there's a lot of good information here that I will let you read on your own time there, but a lot of good information in the rest of that letter.
That's one thing with Plant Moran's experience with many districts throughout the state. They do maintain this kind of library of upcoming information. So that other informational section is, even though it's lengthy, it is a lot of really good, timely information for you as board members. So I think the next document that we'll go to, and we're not going to go through, it's the big, thick one, the financial report. Mr. Sportel will talk a little bit about their auditor's report.
So it should be the first couple pages that you come to, titled Independent Auditor's Report. Again, I'm just going to highlight a couple things in here. You can see in that first opinion paragraph, or opinion header, the second paragraph there, in our opinion, the accompanying financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, each major fund, and the aggregate remaining fund information of the school district as of June 30, 2023. Going down one more section, We conducted our audit with auditing standards that are generally accepted in the United States of America. We also do the audit under the proceeds applicable, or the standards applicable under governmental auditing standards. Going down to the next piece, responsibilities of management. So the financial statements are the responsibility of management. They are responsible for their fair presentation. Going down to the next section, our objectives, our responsibility as auditors are to obtain reasonable assurance about whether those statements are free from material misstatement. Down below, you can see those bullet points there. These are some of the items we use in accordance with GAS and government account auditing standards. We use professional judgment, we use professional skepticism. We obtain an understanding of internal controls. However, we do not opine on those internal controls. As mentioned before, we are required to communicate to those charged with governance, which would be the board, any deficiencies or material weaknesses that we do come across in those reviews of internal controls and processes. And that's about it for the report letter that I want to highlight there. The rest of the financials we will go through at a high level in the presentation.
So I'm going to say, the rest of this report, it's 100 pages, a lot of numbers there in there, so that's why we'll do the high-level presentation on the numbers part. But after you have had time to look at them, if you have questions, definitely give me a call and I can help you walk through what it all means. So we'll move to the presentation, if that's all right.
So the first slide we come to is the assets slide as of June 30. On the left-hand side, we can see the district-wide assets. On the right-hand side, we have the general fund assets. As you can see, a large portion of the district-wide assets are made up of that $295 million, about 54%, which is capital assets and right-to-use assets. So it includes leases, buildings, all that sort of items. Second largest being inventories, other assets, and deferred outflows. That $142 million is about 26% of total assets at the district level.
So just to give a little bit of background too, the district-wide statements include all of our funds of the district, and it does use a full accrual method of accounting, where on the general fund, that's only our general fund, so that's the general operating, our grants, and our athletics funds. And that one is the one that uses the modified accrual version of accounting. And like I mentioned previously, that receivables within 60 days is one of the big differences on that side. And then deferred inflows, deferred outflows, which gets really deep into accounting language, but.
On the general fund side there, you can see the large portion, about 44%, is made up of cash and investments. And then the second largest piece there is related to receivables, about 35%. Moving on to the next slide. This slide highlights the liabilities in net position. Again, we have the district-wide on the left-hand side, general fund on the right-hand side. You can see the large portion on the district-wide is at $505 million. About 92% is related to that MIPSR pension and OPEB and deferred outflows. So this is the pension liability.
So for our new, sorry to keep interrupting,
Go
but our
ahead.
newer board members, if you remember, we're part of the Michigan Public School Employers Retirement System. As part of that, there is a district or a statewide liability for future pension benefits and future post-employment benefits as well. GRPS is assigned a portion of those in the district financial statements. That's that huge liability number out there. So it's part of the statewide pension plan and that liability.
And then moving to the general fund side, you can see the large portion there is 17% on the unearned revenue and also the accrued salaries and fringes there. The next slide is specific to the general fund. This talks about revenue by source. On the left-hand side, you have 2023, and on the right-hand side is prior year, 2022. You can see it's fairly consistent year over year. About 20% of the revenue is federal revenue. About 26 to 28% between the 2 years is local revenue, and the remaining 52 to 54% is state revenue. So very consistent year over year there.
And one of the changes there, just to highlight for you, if you remember, our foundation allowance is made up of two components: local property taxes, as well as state aid through the state. So local property taxes, that amount has increased, and so that's where the biggest variance is there. In addition, our investment income, as you've heard during 22, 23, interest rates started to rise. So we actually went from about 200,000 in investment income in 21, 22 to 22, 23, it was 1.3 or 4 million, I believe. So significant increase in our investment income, but that's related to the the interest rate increases, so.
Question, and more for you. When we had that facilities master plan meeting, do we anticipate the local going down as a result of that being implemented?
The local percent there, based on the bond? Is that what?
And potential implementation of the plan?
No.
Do you
say it
think it would
shouldn't
continue to increase?
Yeah, this is general fund revenue, so our bond revenue would come in under capital projects and debt retirement,
Okay,
not necessarily under this general fund.
got it. Thank you.
It gets confusing, we have many funds.
Yeah, that's what I was like, hold on. Yeah, thank you.
The next slide sticks with the general fund, but talks about the expenditure side. So, as you can see, again, 2023 on the left, 2022 on the right. The large portion, 85% last year and 82% this year, is made up of instructional and support expenditures. The remaining 15% last year and 18% is other district expenses. And you can see what makes up those specific buckets on the left-hand side there. So some of the instruction and support, this is direct instruction, principals, secretaries, counselors. Some of the items in the other section there, operations, community service, debt payments, tuition, superintendent salary, personnel, labor relations, and so forth.
So this is one for our board members too, for those of you that have been on the board. A number of years ago, we wanted to use this graph to show support that was more directly in buildings. So it looks a little bit different than like our monthly financial statements where we have instruction and some of these items like nurses, librarians, transportation, and school custodians. In our monthly financial statements, we typically show those under support. But on this one, years ago, the board asked to see what was more directly impacting buildings. So this graph shows instruction and support as those items that are more directly in buildings versus items that are more central office related or general overall district. So part of the biggest part of the increase on other district expenses is our transfers. If you remember in 22, 23, we did a general fund transfer of money over to fund our capital projects funds of $7.5 million. So that was enough to skew the percentage for those. And those, if you recall as well, we've been intentionally building up our fund balance, using our ESSER dollars to fund some operating costs. So to fund our capital projects that we had originally thought we were going to use ESSER dollars for. As new guidance came out and we were implementing, we said, no, we're not going to use it for capital projects. We'll put some operating costs into ESSER that are allowable, build up our general fund balance to be able to still do those projects. So it's been HVAC projects, the parking lots, the playgrounds. Upcoming, it will be the work that we're doing on the pools as well. So just kind of to give you some additional background on some of those changes.
The next slide talks about the general fund balance. 5-year look back here. You can see this year, the percentage line is fund balance as a percentage of expenditures. So if you take your whole fund balance divided by all the expenditures we talked about the previous slide, we're at about 12%. 12%. You can see that's slightly above where it has been the last 2 years. And then you also see the breakdown of what those, the colors there. The lighter blue at the bottom is the undesignated unassigned, and the top is the non-spendable portion.
And just to highlight for our board members as well, this graph is showing it as a percent of expenditures. This is kind of historically how you look at a fund balance percentages based off on expenditures, but our board policy does do it off from the state's early warning that has it as a percentage of certain revenues as well. If you calculate it that way, our fund balance, and I don't know if it's showing, I think we're just using percentages. So our fund balance and as of June 30th, 2023 is 30.9 million. So that is the highest I have ever seen it in my tenure at Grand Rapids. It does calculate out on that early warning calculation of about 19.4%, I believe. So it does get us over our board policy of wanting to be between 5 and 15%. However, as I just mentioned about our transfer to capital projects, it's a timing difference in that to fund the capital projects that we've been doing over the summer, in the fall, those HVAC projects, all of those, I'll need to transfer about $7 million over out of this fund balance over to fund those capital projects that we've got going on before we have the passage of the bond. So in doing that, the fund balance percentage will drop to about 15.45%. So again, to go back to our ESSER story, that was our goal with using ESSER funds, was to get from, historically, we've been running about that 5%. We were right on the edge for many, many years, which made us very tenuous on events happening and potential additional state input into how we run our district. So we've always wanted to stay above where the state would come in and, I don't know, dictate might be a hard word, but they would have a lot more say over how we run our district, and we've always wanted to stay out of that realm. So when we got the ESSER funding, we wanted to be intentional to come out on the other side of it with a much stronger fund balance. So having it up into that 15% range is where we want to come off this ESSER cliff, and hopefully that will help us sustain long-term our programs, our staffing, compensation levels, all of those things that we want to be able to sustain in a better manner. So it's exciting, to be at that level, but there will be a lot of work to do as we go forward. So.
Can you define assigned?
I'm sorry.
Assigned, what is?
Assigned fund balance? Do you remember what's?
Yeah, it's typically anything, the most common that would fall in assigned is if you had a budgeted use of next year's fund balance. So if you were budgeting to use, let's say, $2 million of next year's fund balance, that would go to assigned because it's technically already budgeted for next year.
Oh, because we didn't forward any of that for 2022 or 23, seeing that it's not on there?
That's
Is
why
that how
that's
it's-
not correct.
Okay.
Yeah, it's clue in is as we adopted our budget for 22 and 23, we had a positive revenue over expense. So we didn't have an assigned fund balance.
And I actually was going to ask about the non-spendable. Could you explain that a little bit?
A lot of times that is your inventory and prepaids where it's essentially already spent. Like your prepaids, you've already spent it, so it's sitting in non-spendable because you can't spend it again. And same thing with inventory. It's assets you have on hand that is not liquid cash, essentially.
Okay, all right, thank you.
And then the next slide is, again, on the fund balance as a percentage of total expenditures, and this is a kind of a comparison of some other districts in the state. So you can see there, 8.5%. This is actually last year's because the current year data has not come out. So this is last year's 8.59%, and you can kind of see where you stack up compared to these other districts here. And you can see the statewide average there is just over 20% for last year.
So we're making progress. And as Mr. Spartel mentioned, that it's a one-year lag. Everybody is submitting their information now, so that data won't become available until spring or early summer, so. So the next document that we have, as part of our federal programs and the dollar amount that we receive, we're required to have a single audit as well. And that is the federal award supplemental information.
Yep, so it should be the last document here. Again, I want to flip to that page 2, which talks about our independent auditor's report. A lot of the same information here. We considered the school district's internal control. We don't express an opinion on the internal controls and procedures. However, if something were to come up, we would let that be known to you. Going down to the purpose of this report, you can see that the purpose of this report is solely to describe the scope of our testing, internal control, and compliance, not to provide an opinion on the effectiveness of those internal controls. So if we go in one more page, we have the report on compliance for each major fund, each major federal program. So we tested 3 this year, which we'll get to that. As you can see in that first section, opinion on each major program, that little tiny paragraph, the second one there, in our opinion, the school district complied in all material respects with the compliance requirements referred to above in all of the major programs that we tested this year. Second section there, again, we're using generally accepted accounting standards, auditing standards. And then the bottom, responsibilities for management over compliance. Management is responsible for compliance with the requirements referred to above. The next page, again, our auditor's responsibility is to obtain reasonable assurance whether there has been material non-compliance with the compliance requirements and to express an opinion on the school district's compliance based on our audit. And then if we want to go to almost to the end, where we have the schedule of findings and question costs. So this is page 14. The top section, section 1 there, talks about the auditor's results. You can see we didn't have a material weakness, and the top section is the financial statement portion. So no material weaknesses or significant deficiencies in the financial statements. And in the federal awards, we have no material weaknesses, and we have 1 significant deficiency, which we'll talk about on the next page. And then you can see down below the 3 programs that we tested. So we tested ESSER, the Education Stabilization Fund. We tested the Child Nutrition Cluster, as well as the Special Education Cluster, which is IDEA. And then the second section there is financial statement audit findings. You'll note that says none. And then there was 1 federal audit program audit findings, which I'll summarize. It related to the child nutrition program. There was an instance where there was 1 application that was approved for reduced lunch that did not meet the correct income requirements. So those 2 students that were on that application were receiving reduced cost lunch when they should not have been. So overall, the dollars were very low. They were below the question cost. You can see in that it was less than the $25,000 required cost reporting threshold. And then this goes into some of the more details on how that happened, and then the district's response and how they will correct that.
So just to give a few more details on that, as you know, we provide lunch programs for non-GRPS schools. As part of some of those, there are free and reduced lunch applications still. It goes through Horizon's software system. As part of that, the family indicated they had 3 members in their family. One of the students, they left off the student ID number, so it flagged an error. Our nutrition staff went in to fill that in, but they didn't realize at the time that the system assigned a 4th person to their household on that, so they entered the student ID. The system still thought there were 4 members of that household rather than the 3 actual names. So as part of that, Horizons has done a new software update for this fiscal year. So it should not be a problem this year with that, but as always, now that we know that there was a problem, nutrition services staff are definitely checking that ongoing throughout the year. But also what we will do in June, because families can go in at any time and adjust those free and reduced lunch applications. We don't want to be checking it every week. Even though there's not a large number of them, we don't want to use staff time to do that. What we will do in June, at the end of the year, is manually review all of those free and reduced lunch applications to make sure that they are in compliance with the federal rules and adjust if, for whatever reason, something needs to be adjusted before we do our final claims on food service. Any questions? I know it's a lot of numbers, a lot of words, especially in this federal audits, it's a lot of required language, governmental language in there, so sometimes it is very hard to read, but if you've got any questions.
And one more thing, we would like to extend thank you to Rhonda as well as Dan and the entire business office. They have been very helpful throughout this year, as they are every year. We throw a lot at them, we throw a lot of requests at them, and they provide it very quickly and timely, so we do appreciate that as well.
Thank you, Rhonda.
Thank you. Colleagues, are there any questions with regards to the information that's been shared with us? If there are, we don't have to, this is not an action item, so if there is nothing else, Dr. Roby?
I do have a quick question, and this isn't something I need right now, but it would be great, I really appreciate this expenditure kind of in a very visual way, the difference between what more directly connects to classroom versus not. I'm wondering if it might be helpful for us to have the supplemental funds done the same way, so Title I, Title III, 31A, those kinds of supplemental funds also distributed in ways that we can see how directly they are connected to the classroom. Looked at before.
This is general fund, so it does include the grants as well as, so it's general operating grants are all included in these numbers in the graphs.
Okay.
To break them out separately by individual grant would be a lot of information. We can get there.
No, that's okay. I guess I'm just processing it then, because things like GRPS University, just for example, where would I find that in this list?
It's just, that is physically a building. It doesn't have a lot of revenue or expense coming in associated. We do run it.
The program, sorry, yes, that is confusing. I mean, the program of GRPS University, like the people that are employed by it, the activities they do and things like that.
You mean parent university or?
Yeah, maybe. It's specifically Parent University as opposed to the building being called GRPS University?
I'm so lost.
Well, let me restate now that I have the right language. So Parent University, which is a program we have, a department that does a lot of great things and hires people. Where would that fall? I'm just not seeing it. That's why I assumed it wasn't.
As I was going to say, Parent University is funded through our Title I grant. And it comes through under, it would be community service type activities, so it would not show as direct support or in that graph under instruction or support. It would be down under the more district central office type things, because even though it's working with parents, it's at a state level considered a community type service.
Yeah, I would
so
agree.
those where it
So
would be
community
included in
services.
those.
And then like safety and security, just.
I'm wondering if that's something that we should be, not per se for this type of audit, but something that is broke, if we are asking, I think take that to the treasurer to get that broke down about seeing those numbers
Okay.
versus in this audit.
Okay.